Morning. Yeah, I was a little tardy. I was setting up the Fed rate decision live stream. Let me get that for you. Be right back. coffee, more coffee. Almost ready. All right, good morning. You excited for Wednesday? FOMC, baby. All right, let's get on with it. Yeah. So, good morning. Happy Monday. How are you? Yeah, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! All right. So, we got a busy week. There's a lot going on. Ooh la la. Lots of central bank stuff, not just the Fed, but Bank of England, Bank of Japan, Bank of Canada. Holy smokes. But if you want to attend FOMC Live with me on Wednesday, then the link is here. You can also find it on Forex.Today. Put the link here, or you can find it right on Forex.Today. Right there. So, yeah, make sure you turn the notification on. You might forget it. It's, I scheduled it for 1:30, so that gives us a half an hour to prepare. Cool. So let's start with our routine. Get a quick update on the recent headlines.
Kiwi dollar US dollar might break above 0.599. UOB Group. Euro US dollar steady above 1.1700 despite France downgrade. BBH. Australian dollar US dollar. The next level to watch is 0.6700. UOB Group. United States NY Empire State Manufacturing Index below expectations. 5 in September. Actual 8.7. Canada manufacturing
Negative
sales for
8.7.
July 2.5% versus 1.8% estimate.
Canada wholesale sales, MOM, came in at 1% below forecasts, 1.3% in July. UK stocks turning in mixed performance.
Canadian dollar up marginally versus US dollar. Scotiabank. Poland inflation eases less than estimated.
Pound US dollar above 1.3595. A move toward 1.3635 can be expected. UOB Group. We're looking at a break of resistance here, a euro dollar 4-hour chart. 76% chance. Yeah. Can we make it to the upside there? 118? At least. Maybe 119. Yeah. Cool. And remember, I changed these from patterns that are forming versus patterns that are in play. This is in play. That's considered a breach of resistance. So now we're going to go to the next level of resistance. In theory, anyways, that's what the patterns suggest. I hope you appreciate that change I made to the squawk box. To say, hey, dude, this is in play right now. Yeah. And if you want to burn through a bunch of them, these are all the things that are in play right now. Oh my God, Wayne, that is so awesome. Oh, really? Oh, really? Is this what you like? This is the thing? Oh, well, you have it now. You're welcome. But just to put this into perspective, what we got going on. UK jobs, US retail sales, balance of trade out of Japan, CPI out of UK, Bank of Canada interest rate decision, Fed interest rate decision, Bank of England interest rate decision, CPI out of Japan, Bank of Japan interest rate decision, UK retail sales. Oh my goodness me. Yeah. What a week, bro. That's a cray week, huh? Yeah. Are you talking about the third week of September? Yeah. So, anywho, I've already done all the fundamentals. I've already reviewed the COT. So here's how this works. On Fridays at 3:30, this commitment of traders report is updated by the CFTC. Okay, they release it as a table. CFTC.gov. I've been to this website 10 times this week. Okay. But so they have a lot of different reports. Great. And then you can go to this one. Great. And this is what they update every Friday at 3:30. Now it's so important to being a consistent trader that we TRADARS logs directly into the CFTC database, gathers all this information, and then reports it. Then later on Friday, Maida runs a group that at traders.com that reviews the new commitment of traders report. And then on Mondays, I review it again. Okay. Notice that this report has asset managers and leveraged funds. Not just the old way of commercials and all that kind of stuff. So anyways, it's that important. And then instead of looking at that table, we like to look at pretty colors. And then we like to break the table apart and do comparative analysis. And then we like to see how this actually impacts the charts. So what does this mean? Euro dollar. Euro is green. This is the market's positioning of euro. Dollar, okay, the market is net short. I don't care how you think about it or how you feel about it or what you want. More institutional investors are short the dollar than long. And more institutional investors are long the euro than short. So net long euro, net short. And so we represent how the distance between the net long, net short with these, right? With these bars. This red line is the price of euro dollar. And it seems like price was falling until we valleyed out. We didn't peak out, we valleyed out, we troughed out. And then positioning changed and the price went up. Isn't that nice? So we're doing the bars. The red line, the price of the euro dollar, is just a consequence. Cool. So isn't that nice? Yeah. And wouldn't it be nice if you knew when in the year that happened? Oh, we know that. We call that seasonality. But anywho, let's get on with euro dollar. Okay. 3, 2, 1. What's going on with the euro dollar? This is what's going on. Nothing's right, I'm told. Yeah. All right. So we are looking at lovely little patterns for our, there's the break that we saw earlier. Then the 30-minute, we have strength with an opportunity. On the 60 minutes, we have strength with an opportunity. So I would suggest, since these are all lining up, that you go to your euro dollar chart and you start thinking about longing if you happen to be a bull. Now we have that bias all set in here on our fundamentals section. So, yeah, so you know if you're a bull or a bear. Yeah. And you should probably have already analyzed the market and know things like pound is strong, Aussie is weak, Kiwi is weak, CAD is weak. Did you know that? I hope you did. The reason Asian currencies are weak right now is if you review the data coming out of China across the board. Okay. This isn't what's in your news, but this is how the Wayne do. So if you're tracking the National Bureau of Statistics out of China and you look at some of their key things. So you want to look at inflation and GDP and retail sales and trade balance. And yeah, I mean, you want to look at it all. But right now, if you just quick eyeball growth rate, CPI, okay. Look at this retail sales. Oh, it was really good last year. Right? Does that look like up to you? No. So anyway, so you can go through all this stuff. Now, I'm taking this data and I'm putting it into TRADARS. But nonetheless, you should know these things that are going on before you even get to your charts. So I'm only looking at euro dollar here for you guys on the live stream because it's popular, which is interesting because it's not really the thing you should be doing. How do you feel about Aussie? How do you feel about Kiwi? Are you risk on? Is the Fed going to cut? How do you feel about the US dollar? So that's only partially answering this, right? So it seems like the Fed's going to cut, and that should weaken the dollar, and up, up, up. Yep, okay. Great. is euro the right one or is it pound? Well, according to this, euro's moving, so you're fine. You're good. But it's not necessarily always the right thing for you to be doing. But, in our YouTube world of traders, it's always going to be popular, right? Like everyone wants to know what's going on euro dollar. But I hope you're putting a little more research into it than that. So let's move on to the next. You like the Bitcoin? This might be an interesting risk on, risk off gauge for you. And what do we see here? Weakness on a 15-minute chart. Strength on an hourly chart. Strength on a daily chart. So later today, maybe we kick off of, right? So let's do it this way. This says down. It's only short-term down. This says up, and the next leg would look like that. And in fact, you could let it run for days. Okay? Conservative target, 133. 133? Shh! 133? That's right. So buy a coin and take it home tonight. So anyway, not now, but maybe soon. Okay? You catch a ride that glides on the biddy, huh? Maybe. It's nice to be able to look at all these time frames, but what's even better than that? Not looking at the other time frames that are a waste of your time to look at. I know, right? Yeah. You guys good? Everybody happy? It's going to be a good week. There is news every day. What about yields? We want yields to go down. So we want the price of the 10-year T-note to go up. If the Fed is cutting interest rates on Wednesday, then the yield on the 10-year T-note will fall. Therefore, the old 10-year T-notes that pay, 4.1, 4.2, 4.3, 4.4, 4.5, depends on when you bought it. 10-year T-note at one point paid 5%. So let's say you bought a 10-year T-note and it pays 5%. And on Thursday, the 10-year T-note pays 4%. Which one is worth more? Well, you have to take out 2 years of cash flows, and then you have to do time value of money, cash flow analysis. Yeah. But you know how it works out? The value of the new one falls. No! The value of the old one goes up. You see? All right. Because one pays 5 and the other pays 4. I mean, you're always going to want the one. But then when you get down to the price, then you do the time value of money calculation and take out the 2 years. So that changes your cash flows and whatever. Straightforward stuff. That's how bonds work. I like bonds because it's just math. No one mathematically wants to pay too much or too little or sell it for too cheap. So it always comes out to precisely what it's worth based on cash flows. So you can buy a 10-year T-note that pays 5% for 8 years, or you can buy a brand new fresh cut 10-year T-note that pays 4.2, but maybe in 3 days or at the end of the week, it only pays 3.99. Well, then you can still do all the calculations and figure out mathematically what each one is worth. That's called finance, which is nice. And no one's going to overpay because why would you do that? And no one's going to sell it for cheap. Why would you do that? All right. So anyways, 10-year T-note, what do we see here? Prices have been going up, which means what? Investors in treasuries believe the Fed is going to cut. Cool. Well, what about now? What about today? Well, we've cooled off over the last week. We're in a cool-off period. But we've been in an uptrend, so that exhibits strength. So remember, like if you look at the link below the video's description there, there's downloads on how to do SWOT analysis for all these patterns, right? And so you look at this and it shows strength, but a threat. So that means if you're going to buy it, there's two prices in which you could buy it. We don't know which one, but this is where you then go to a chart. But you want to say, well, plan A is going to be off the moving average, and plan B is going to be off the projected low. Okay, it's a linear projection. So you got A and B. So you note what those are, you eyeball them. Okay, and then you can do technical analysis on your chart. This is only pattern recognition. It's only showing you it's an uptrend, so you should want to buy, which is good because I'm a buyer of this. But you're under threat. It's showing strength, but you're under threat. Well, which is okay because you want to buy a dip. So now you go to your charts and say, well, what's the right price? 113 or 112.50? Okay. And you're on your way up, which is good, which means yields fall, which means the Fed has cut. And the Fed is expected to continue to cut by market participants. And you can see all this data in their pricing models. Oh my goodness, isn't this lovely? Lovely. Gold. How do you feel about gold? How do you feel? That's bias. What do you think? That's bias. What is actually happening to gold? Well, I don't know. Let's look for bullish patterns and bearish patterns and consolidation patterns on 5 time frames on gold. Oh my God, Wayne, that's a lot of work. No, it's not. It took me 1 second. If you look at a 4-hour, we have an ascending triangle, so it's a slight bullish based on, right, this pattern. Ascending up, but we're not ascending very quickly, and we're nowhere near the apex. And if you know technical analysis, okay, then you're like, well, okay, yeah, maybe eventually it breaks. So it is strength, and there is a slight opportunity, but it's not a good opportunity. Now, you have to know if you're a bull or a bear. So if you're an aggressive bull, you're like, okay, I could probably take this north. I could kind of do this, this, this. But you should also know it's not a very good opportunity. What about the 15? No pattern. What about the 30? No pattern. What about the 1 hour? No pattern. What about the daily? No pattern. So all you have is your fundamental bias and a 4-hour chart with a slight edge to the upside. Now, with the dollar weakening, that gives you some hope there, but this is just pattern recognition. It's not doing fundamentals. It's not thinking about whether it should go up or not. It only recognizes a pattern of essentially horizontal resistance with diagonal support. Therefore, what do? You measure the distance between those two lines and you can project up. Wow! Yeah, it's not a neural network and fuzzy logic. It's not looking at 7 million data points to predict the future. It's like, no, that's an ascending triangle. And it hasn't even come to fruition yet, which means it hasn't even broken to the upside. So by definition, you're early, but use the same logic. Well, maybe you kick it off the moving average, maybe you kick it off the diagonal support, or maybe you wait for the break, catch the pullback. You do you. But the thing is, that took 1 second to do. Where if you went through 5 charts looking for something, you're probably going to find something, even if it doesn't exist. A machine doesn't do that. Nice, right? So I'd like the stock market to go up. I'm a bull. I think the Fed will probably cut, and that should be bullish. So I think that'll be good for the S&P 500. So I'm a bull. I expect to be a bull. I'm looking for bullishness. Hey, TRADARS, look for 5 or 6 different bullish patterns, 5 or 6 different bearish patterns, 5 or 6 different consolidation patterns. Oh, also look for 5 or 6 different reversal patterns, and then take all those patterns and tell me if they exist on 5 different time frames. And it says, okay, boss. Oh, it takes you longer to do all that? Well, then you're wasting your time. I guess you got more time than money. Yeah. I don't know about you, but I'm running out of time. So anyways, 15-minute charts, strength, opportunity. 30-minute chart, strength, opportunity. 60-minute chart, strength, opportunity. Oh. Hey there, boo-boo. You got to get the pips from the picnic basket. Yeah, I'll probably get a copyright claim on that, huh? Yeah. Huh? Look at that. So I got some hope. Huh? I got some hope, but hope's not a strategy. So that's where you would now go to your chart. So let me open up my Traders Way MT4 platform. I love you, Traders Way. Okay. Okay. Oops, wrong one. Anyways, hey, look at that. You know what we do? You know what you call this? Swing trading. We did this in our swing trading group. Up to down to up to down to up. Oh, is that what's happening? So we got the up, the down, and now the up. So maybe a down and an up. Nice. No, but we wanted S&P. Sorry. I thought I'm on the wrong thing. Pivots US dollar. No wonder. Commodities. Yeah. Oh, watch oil today, by the way. Yeah. Oh, look at the buy zone on Bitcoin. Oh, my goodness. Gold. Look at that. Oh my God. Look at our all right. So we wanted to look at this. What was it? An hourly chart was the best one we had, right? So now you go to your chart and you do the type of technical analysis that you like to do. But you should just know that if you're going to trade the S&P 500, you just very quickly analyzed slight bullishness on a 15-minute, 30-minute, and hourly. And so now you can plan the rest of the day, the rest of the week. And I wouldn't be shocked if at some point we use this as a buy. If you want to use more of a traditional chart, you can. Okay. I kind of like some of these things, huh? But the traditional one that we use would be like bullish bias swing trading. How about that? Okay. Okay. And our target is 66.55 conservatively, 66.80 aggressively. Oh, Wayne, that's very good. I know, right? But maybe that's too aggressive since we'll probably fizzle out before we get to the meeting. So why don't you just say, well, Wayne, why don't you show me day trading scenarios? So there's swing trading, there's position trading, there's day trading, bullish bias. Okay. Okay, cool. So what was the trade plan for today? Oh, buy it in this green zone, take profit up here. You see that? Buy here. Oops, wrong color. Buy here. By the way, I didn't just put this green line, this green zone here. That's been there since Friday. So you either know or you don't know. If I didn't know and I just found out that everybody else knows, I'd be pissed. But anyways, there's your buy zone, and we already know this is your profit zone. So you've already missed the whole entire day, but that's normal. New York is way too late for you to just start. You're just starting your day. Wayne, I live in Massachusetts. Yeah, well, you should have planned this out last week. So what do I mean by that? What's tomorrow's trade plan? That. So are you setting that up for later today? That's what you're supposed to be doing in New York. You're supposed to be setting up tomorrow. Today is already done. You should be taking profit by now, huh? I hope somebody somewhere out there has an aha moment that says, oh my God, I walk into New York trying to figure out what to do, where institutional investors are like taking profit and figuring out what to do tomorrow. And that's what's going to happen later today. That if people start taking profit up here, it's going to fizzle down, and then someone's going to have buy orders on the role reversal, and somewhere between the London close and the New York close, aka Asia Open, don't be shocked if we're using this as support. Or that the weekly target is so high that this buy zone just keeps going and barely gives you any pullbacks. We hit the target early and then collapse later. Well, we don't know what's going to happen. But I hope somebody has an epiphany going, oh my God, I've been trading with moving averages. That's great. I've been trading with pivot points. That's great. I've been trading with RSI. That's great. I've been trading with MACD. That's great. I've been trading with CCI. I've been trading with ADX. Great. All that's great. None of that's wrong. Everything you're doing is probably right. You're probably using trend lines. You probably draw support and resistance. Okay. You're probably doing everything right, but your time frame is off. You're doing everything right on schedule, except your watch is wrong. So you might show up, analyze everything that's already happened, and then try to jump on board at the end of the road. You're like, oh, I've analyzed this. It's gone up all day. I guess I'll buy it. No. People that bought it here are going to start taking profit, and they're already thinking about buying here. So what it does is it pulls back. Then you capitulate. You take your loss because you bought it high. It pulls back. You lose 30, 40 pips. You freak out, and someone else has an order there. They buy their position back. So the buyer here will probably buy it back. You'll sell it at a loss. They'll buy it back and take it up to the next level. But there's a lot going on. That's just day trading. You're like, yeah, but Wayne, now you're talking about weekly pivots and all that kind of stuff. Yeah, so this is why we have a daily confluence so that you can see daily, weekly, and monthly all in one shot. So what's the monthly target? Oh, that's easy. Here and here, 66.91. So maybe we can get pretty close to 67 in the month of September based on implied volatility. In fact, based on implied volatility and the training courses and all that, if this is your support, this is your target, by the way. Okay? If this was your support, if that was your lowest low, this would be your projected high. Okay, we got somewhere in between. Okay, fine. So, but you would still you would say to yourself, wow, it's really rallied. Wow, it's crazy. But maybe we can get to 67. Yeah, maybe. Yeah. Typically what you'll find in August, do you guys mind if I get a little deep here? Get into the weeds a little bit? Typically, August isn't that great of a month, meaning it doesn't really go up or down. So what I kind of teach is it goes, let's say kind of like this. Not that pattern, but let's say that range. Therefore, September pivots are going to be based on that lowest low, that highest high, and a close that will be, let's say, a little more bullish than bearish. So these pivots will be up, but they'll be tight, which means if that occurred, and it looks like we had a pretty decent move up. Okay. And wasn't that our conclusion in the annual outlook back in January? Wasn't it that we looked at 2016 and the move happened sooner than later? I'm kind of vague on that now. I thought that's what we said. But anyways, in a typical tight month, we call that an inside month. So if August is an inside month, September wouldn't be. The pivots would tighten for September, but September's not a consolidated month. So you would go for R3. That's sort of the advanced, right? This would be you could, you should, and you must take profit. And you're like, well, we had an inside month for August, so I'm going for R3 and SEP. Yeah, that would, I can go along with that. But did that happen this month? This August? I don't know. I don't know. Well, compared to July, it's fairly conservative, right? Yeah. So, anywho, what a world. What a life. I'm in love with trading. Thank you for being on my team every day. Thank you for allowing me into your trading life. Thank you for making me your chief economist for your successful small institutional Forex trading business. I appreciate your work ethic and your professionalism. I like what we do here at Forex.Today. I like TRADARS and Traders Way working together. It's the perfect match. So we have this full ecosystem for you now. And there are amazing things coming. Amazing things coming. It's going to go from amazing to phenomenal. Phenomenal. Huh? The funk phenomenon. The funk phenomenon. The fundy phenomenon. Anyways, hey, that was real.